Hello, everyone. So basically, Powell's not really talking about anything really important here. We knew that he was going to be giving a speech after hours at 4. Doesn't seem like it's anything groundbreaking. So we have it should be clear. So in today's video, we're going to take a look at the S&P, the NASDAQ, the Russell, which was a big winner today, the dollar, the bonds, and the yields. And then, of course, the large tech stocks. All right. So without further ado, let's get started with the video. And before I begin, I just want to mention that I started free one-on-one 30-minute coaching sessions. Anything related to trading, anything related to anything at all that you guys want to speak about, any problems that you might have, any things in terms of strategy that you guys want to talk about, personalized for you, 30-minute sessions, completely for free. One session per week per person. So to get that, you guys can go to the link in my bio or in the comments, or you could simply just type in calendly.com/HamidTrades to get that, and then you can schedule a session. This month is booked, and then next month should be good to go. All right. So yeah, looking forward to that. I really, genuinely from the bottom of my heart, like it really excites me, and it makes me very happy that I can do this. And yeah, man, feel free to schedule that. Looking forward to seeing you guys. All right, let's get started. All right, so what I first want to do is I want to start off with the large AI chip related tech stocks that have been driving this market for the past few months. And namely, specifically, I want to talk about Google. So I was bullish on the market. One of the reasons why I was bullish on the market was because we saw bullishness out of Google. So Google was very overextended to the downside, and we started to bottom out. And then this green candle from yesterday, when that happened, it's very likely that the next day would also be green. And today we had a continued bounce on Google. This was pretty predetermined, and I had a pretty good understanding that this was going to happen, which is another reason why we went long on the NASDAQ, because specifically I had a feeling that Google and the tech stocks would be doing well. All right. So Google, obviously, it is getting close to filling this gap. But what I first want everyone to realize is that now it's getting very difficult. So pragmatically, it's getting difficult over here to start going long because we are at levels of resistance. Very simply. Okay. So now if we have another move to the upside, it isn't a guarantee that it's not a safe long opportunity. Okay. So I'm going to explain that to you guys, but let's just recap what went on with the various tech stocks. All right. So Google obviously did well. Nvidia and the chips. So Nvidia held this level of support, hugged this level of support, big move to the upside. And then of course AMD had a monstrous move to the upside as well. But the issue, right? Nvidia is coming to this level of support at 437. AMD is here at this level of support at 104, 105 area. It wicked off of that level, right? And then, you know, when you look at the SMH, it's not entirely at a level of resistance, but it failed at 146. So we're starting to see some strength. But once you start getting moves like this, it's tough to start going long. Instead, what we're gonna need basically is a bit of a pullback and then a continued move to the upside. So that is sort of the issue. But now let's just quickly take a look at Microsoft. Microsoft obviously held the lows. Amazon did not do well earlier, and then it bounced later on in the day. Netflix, we already know Netflix, not great, but then a lot of good news recently for Facebook. So Facebook is doing really well here, and yeah, this is overall the Tesla as well showed some strength, and Apple as well started to show some strength, closed back above 170. So you can't aggressively go long Google and the chips. now these losers are going to need to pick up the slack. So the losers, meaning Tesla, Microsoft, these stocks need to start showing some more strength to give a break to Google, Nvidia, and AMD. Does that make sense? So the large chips and AI related stocks, those were the ones that drove the market, right? But Microsoft is a part of that group, but it's not showing that much strength. So Microsoft, Tesla, Amazon, Apple, these are the stocks that we need to start showing some strength in for a continued move to the upside in the overall market. I hope that makes sense. So I hope that makes sense. And all right, very simply, let's just zoom out and take a look at the yields and the bonds. Okay. So obviously for the 10-year yield, so the yields are relevant because they have an inverse relationship to the market. Okay. So if the yields are showing bullishness, then it is bearish for the overall market. And the theme across the board for these longer term yields, the reason why, okay, so let's just take a look at the longer term yields. The 20-year yield clearly overshot to the upside and it closed within the Bollinger Band. This is not a bullish setup, but the yields based off of this move here, if this was an equity, we can easily come back and fill a bit of this wick. All right, we could fill a bit of this wick up. So if it does do that, then that's bearish for the market. The 30-year, similar concept as the 20, right? Had a wick to the upside, neither of which are very overextended, but we opened outside of the upper level on the 30-year. So that is extremely overextended. But in the short term, so on the short term, in these moves, we could have a continued move to the upside. But overall, I don't think we should break above this high. And it should instead pull back a bit further down. That is my thought process. And then when you take a look at the shorter term yields, they're already showing weakness and they're already breaking down lower. So the 2-year is breaking down lower. This is bearish. This is a very, very similar setup to when the SPY hit 453. Very, very bearish. This should not break back above, right? If you guys remember and you guys were watching the videos, it should not break a high here unless it first makes a new low. So this is sort of that low, but there's still more weakness. And then eventually, this should break a bit lower, and then maybe we could have a move to the upside. And then the 5-year. Also, this is not really a bullish setup. We could regain and bounce back up a bit, but then overall, this is a bearish setup as well. So the yields look bearish. And because the yields look bearish, that is bullish for the overall market. Now take a look at the bonds. Okay, so the bonds have a more correlated relationship to the market. And this is, we can see that it just made new lows. And it made a hammer, a green hammer. Now, this is relevant because when the bonds are doing well, then overall market is also generally supposed to be doing well. So this could have some strength. And if this holds here and bounces, that could start to permeate into the overall market, but it's not immediate. It's not as dramatic, okay, as the yields. So the bonds, the correlation with the bonds in the market hasn't been there entirely. So now the only other thing that the only two things to take a look at now are the dollar and the VIX, and then we could have some fun, take a look at the charts on the SPY and talk about levels there. All right, so now for the dollar. The dollar is important because it has an inverse relationship to the market. So if the dollar is bullish, then the overall market, the stock market, is bearish. Okay, so clearly this is a reversal candle. This does not look very bullish. And of course, the same concept, similar to the yields, similar to specifically the 5-year yield, the dollar can bounce a bit. It can give a bit of a bounce. It can hold this level of support, but it's very rare that it would break back above this high before making another low first. Okay. Now, of course, we could make another complete high and then we could fall from there. But this is not really a bullish setup on the dollar, pragmatically. But of course, in the short term, we could get a small baby bounce, and that small baby bounce can cause a small baby drop in the overall market. All right. So that is sort of a bit of a predicament at the moment for the dollar. And it's not that simple at the moment. But the dollar does look bearish, and the yields do look bearish. But all of them are giving an opportunity for a small bounce. Okay. So there's that for the dollar. Now let's take a look at the VIX. Another interesting thing about the dollar is that we are at the upper trend line of this level here. So from back in July, we have been making an uptrend, and this basically failed at that level here, at this level of resistance. So obviously this is also bearish on the dollar. It failed to continue to hold above this, and instead it rejected. So bearishness on the dollar leads to bullishness on the overall market. All right, so now let's take a look at the VIX. So the VIX, obviously, yesterday's overextension to the upside caused this to fall down even more. So this is also not a bullish setup on the VIX. But the issue, similar to the dollar and similar to the 5-year yield, none of them look bullish, but we are at levels of support, and it could lead to a small move to the upside. But overall, this is bearish on the VIX, bearish on the yields, and bearish on the dollar. Okay, so that is currently all bullish for the overall market. Pragmatically, that's what this stuff is showing. Okay, now let's have some fun. So currently, right now, this is the hourly chart of the SPY, and you can see that it is currently in a falling wedge. Falling wedge patterns are extremely bullish patterns, and what I did was I created a fib level from the most recent highs from 451 to the most recent lows that we had. And what we did today was we came and touched the 23.6% fib here. And that is a pretty safe bullish area. The next level of resistance that we would need to touch is the 38.2% fib at 433. And that is entirely possible given the potential bullishness in this entire setup. So we could continue, and then 433 would be a very, very important level of resistance. Essentially, safe 38.2% move. For it to, so look, for this to fail here at the 23.6% fib and then move lower would be very, very, very bearish. And that is entirely possible. We could, but I want you guys to understand how bearish that would be for us to basically bounce, retest the 23.6% fib of a move, and then fail there and then just reverse back and make new lows. That is very, very weak and bearish. And I don't really think that would happen. Now, granted, right now, as we have touched the 429, 430 level, it becomes really risky to try to go long. Yep, sorry. So it becomes very risky to start trying to go long at levels of resistance. So pragmatically, what needs to happen is 427 needs to hold as support. If the SPY can hold 427 as support, then we can continue moving up higher. But if that does not hold as support, then yes, a retest of this level would be possible. This trend line that we were also holding on the SPY. So tomorrow that level was going to be 425. We can easily break below 425. So this is okay. So look, 427 is a very, very major level. If we end up making another low tomorrow and breaking below 425, then it's going to be really, really tough to hold this 422, 423 level. But then basically just expect some choppiness. I don't think they're going to make it so that it bounces one day and then it makes a new low the next. I also don't think that they'll make the moves to the downside easy, because so far what we've seen is a slow, grinded out staircase down. So if they do want to fail it here, it is possible, because now it's sort of a very risky time to go long. And yeah, 427 and 425 are just very, very important levels for tomorrow. The one good thing at the moment in terms of technical indicators is that the MACD indicator here is pointed upwards. And when it's pointed upwards, obviously it leads to bullishness. So the blue line is pointed upwards. So let's see if that can continue. I'm not expecting just a wild, complete reversal overnight to the upside. I don't know how much more strength. So basically, we saw that the dollar and the VIX and the yields have potential for a small bounce. That leads to a small pullback in the market. That is when things are going to be determined off of a pullback. I don't think the market is just going to continue skyrocketing. There needs to be a bit of a pullback, in my opinion. If we don't get the pullback, then that's great. That's completely fine. Our calls will be fine. But that's the only issue here. 427 and then that 425 level. That breaks, then we should probably see new lows. And that's going to be really interesting. But yeah, so the SPY holding this trend line. The NASDAQ also reclaimed, and it's holding this trend line as well. But then when you look at the NASDAQ, it came and tapped at 360. So 430 resistance on the SPY, 360 resistance on the NASDAQ. Makes sense, right? And now we came back to a level that needed to hold on the NASDAQ, 357. Instead, we closed at 358. So yeah, this is similar with the MACD indicator on the NASDAQ as well. It's moving upwards. So yeah, man, it's an interesting concept. Another thing we didn't look at yesterday was the moving averages and how far away we are from the different moving averages. So we're very far away from the 200 simple moving average on the NASDAQ, but then on the SPY we are closer to it. So now the issue is, if we do end up making a new low, this is not a solid level of support. We can easily continue falling lower. So instead of thinking, 420, 418 is a make or break level of support, sure, it is. You could go long, but expect some more weakness afterward. And then it just becomes a matter of numbers. If, say, for example, 410 is the lowest that you think the market can go, you want to get as close to 410 as possible in terms of risk reward. And, yesterday, right, 420 was that very important level of support. Once we hit 422, we were $2 away from 420. That became a very good risk reward to go long. Right now, going long here at 430 is not a good risk reward, because you're $10 away from 420. And then where is your upward target? 437, 440, right? So then that becomes a 0.7 to 1 or a 1 to 1 risk reward trade. So that's why going long right now is just very bad. And what first needs to happen is a bit of bullish momentum. Once there's some bullish momentum with some more candles need to be created, some setup needs to be created here, that's when things can start being a safer opportunity to go long. And it was way safer to go long down there when things were very, very weak. Up here at 430, not the time to start entering extremely exuberant or aggressive opportunities to go long. All right. What really came out on top today was the IWM, and that is generally not that bullish for the overall market. We don't want to see the IWM leading. We would rather see the NASDAQ leading. And when the IWM leads, that's not very good. actually. So that's actually a bearish kind of. That's, I wouldn't say it's bearish, but it's actually like detrimental to the overall market. We don't want to see the IWM carrying the market. Yeah, that's sort of the issue. But tomorrow for the IWM, it looks like the MACD is about to cross above, which is bullish. So 1 to 2 days after we cross above on the MACD, we should be at least neutral to bullish on the IWM, which is good. So let's see if that continues. But overall, we have that falling wedge, the breakout, and we have that 38.2% fib on the SPY, which is at 433. And in my opinion, as long as 427 holds on the SPY, then 432, 433 is definitely on the table. So I hope this makes sense. I'm excited to see what the next steps are for the market. And yeah, man, until next time, I'm excited. Today we went 3 for 3. We absolutely demolished the market in terms of day trading. We did really, really well, thankfully. Hopefully tomorrow is going to be an even better day. It's going to be good as well. And yeah, all right. So I hope you guys enjoyed. Please make sure to like, comment, and subscribe. Do all that good stuff. Make sure to sign up for the weekly coaching session. And yeah, love you guys. All right, take care. See you guys bright and early tomorrow morning. Have a good one.